Hello, friends. Today I am giving you an update on my portfolio. I'm going to be sharing some of my winners, my losers, some of the ideas that I have, or some of the struggles that I've been having, and just letting you know how things are going. For those that don't know, this is Money Talks with Martin Reyes, where we try to take control of our money and also try to find great companies at great prices. Thank you very much for all of you that have been buying my spreadsheet. I really appreciate that. I am working on updating it, so that's part of the reason why I'm being a little slow on putting stocks. I mean, not stocks, videos out there. I'm trying to update it a little bit. For those two wonderful persons that bought my sheet, I will be personally sending you the updated one for free. I don't think is right for me to not update you that. Also, thank you for those two that also bought me a coffee. I really appreciate the support. Thank you for the encouraging words. Before we jump, let me let you know that I am not a financial advisor. This is just for for educational purposes. I'm just trying to entertain a little bit, letting you know about my ideas and the thoughts that I have behind some of the decisions that I'm making. Before I jump into my portfolio, I want to apologize a little bit because it is this is supposed to be the January update, and it's already February 11th. My year has been started really great, but also really busy, and I really want to start continuing to put a lot of content over there. I just I am sorry that I am taking a little longer on putting some of the videos together. There has been a lot of things at home. I'm not at home, at work, and I just wanted to apologize. I don't want you to think that I'm going to disappear. I'm working on some new stocks coming up. I mean, some videos coming up. This video is going to be a little more personal, so that's why I am talking to you just like if you were right here in my office. And yeah, I hope that you understand, and I'm looking forward to some of your comments and your understanding. When it comes to my portfolio, the in January, well, the way that I have it structured is about 60% of it is in ETFs, and 40% I want it to be in stocks. And when I speak about my portfolio, it's not really my portfolio, it's my wife's and mine retirements. She's a very private person, and she doesn't want her numbers, her our financial numbers out there. But at the same time, I really find it fun to know what other YouTubers are doing. So what I have compromised for my wife, so that you guys know, is I'm going to give you percentages, not raw numbers. And I hope that is okay. Really, what I'm trying to provide is just some of my ideas behind why I do what I do, and also to get some of your feedback when it comes to that. Anyway, when it came to January, the last 3 days of January, it kind of had a little bit of a lump. That's why my numbers in January in stocks, I was almost flat. In ETFs, it was pretty nice, 2.73. That's not bad for a month. Overall, since I bought the stocks that I hold, that doesn't include any stocks that I bought, made money, and sold. So these are the percentages that the ETFs and stocks that I hold as of right now, since the moment that I bought it. The stocks together are about 9.9% up, and the ETFs are 8.5 up. My ETF portfolio, which is 60% of my overall portfolio, as of the end of January, it had 5 ETFs: JEPI, JPQ, QQQ, SCHX, and SCHG. One of the things that I do want to let you know is that I sold JEPI. JEPI has been a little flat, and honestly, I bought it because I wanted a little bit of income. And I found JPQ to be better when it comes to my goals of growing our portfolio. I am focusing more on value and growth. So my ETF is mostly growth, and that's why whenever you look at it, if we eliminate JEPI, you have the growth ETF from Schwab. We had the overall market ETF of Schwab. We have QQQ, which is a growth tech crow kind of thing, and JPQ, it's kind of a growth with dividend. So if you want me to talk more about my decision making on the ETF, just let me know. I don't know how many people like to talk about ETFs. I know that most of you guys like to talk to stocks, but if you want me to talk about ETFs, just let me know. When it comes to my portfolio in January, at the end of January, I didn't make any sales and I didn't make any purchases. February is a little bit different. I'll let you guys know in the next video, in the next update video of the moves that I've done in January. But as of so far, whenever we look by sectors, as you can see, I am very heavy in financials, almost 29%. I have 11% in REITs, 15% in defensive, 14.7% in industrials. We have cyclicals is somewhere around 18%, and I do not communications. It's 6%, and then the other one is healthcare. It's about also 6%. So that's how my portfolio is. I don't worry too much about diversification. I do pay attention to the diversification, but I just try to find good companies. Talking about the companies and the portfolio, these are the companies that I have in my portfolio. Those are the 20 something stocks that I owe. Sorry for counting in my head. So these are my top holdings by percentages. Berkshire, I own right now. It's about 10.5% of my portfolio, followed by Highwood. It's about 6.3%. CBS is about 6%. Visa, also close to 6%, and Disney, 5.5%. And as you can see, if you look at the graph, you see that most of my positions were about between 5 to 6%. And the reason is because that was what I wanted to do in 2023. I wanted a little bit diversify. Most of these ones down here are half positions, and some of those are kind of risky ones. Google, that was something that I wish I would have bought more. I just bought it, and then I thought that it had gone a little bit up. I wanted it to go back down to $90, and I just never jumped back in. But one of the things that I started doing at the end of December and beginning of January, once I started thinking, I've been thinking a lot about reducing my holdings, especially because remember, all of these stocks is 40% of my holdings. So a 5% stock is not going to make too much of an impact in my overall stock. So for 2024, I want to push myself into being a little more picky with my stocks and getting close to having only about 10 is my goal, but will be okay with maybe having 14. So for example, let's say that because I consider Olaplex and ammo to be very risky, so I may just have them be a little smaller, just kind of a risk play. I try not to have more than 10% of my portfolio in risk plays, what I consider risk play. When it comes to Visa and MasterCard, I may just keep them as one position. So that could be another reason. Leave them 5 and 5. But most of the stuff that I'm trying to do, I'm trying to move a lot of. I'm trying to build positions to get to above close to 10%. So just letting you know. Let me think what you think about how diversified are you? Are you like are you really diversified, or are you like me last year that I was thinking, hey, 20 stocks is pretty good diversification, or are you more like I'm trying to be in 2024, trying to consolidate a little bit more of your stocks? I'm just finding it really hard to keep track of all of them, and of course, making all the videos about the other ones that you guys are asking for. So I want to continue to do those crazy ones that you asked me about, but also keep up with the ones that I actually own. So when we look at January, my top gainers was, and this is from January 1st to January 31st, Berkshire went up 7.7%. Disney went up 6.6%. MasterCard almost 6%. ADP that went up 5.3%, and Visa at 5.6%. So those were pretty good. However, when it comes to the top losers, Olaplex, my risk play, went down 10%, 10.6% after having gone up almost 25%. So I'm still up on that position, and plus it's a very small position. Movado is down. It was down this month, 7.9%. Albertson, it was down 7.3% after going up a little bit after the news of the whole possibility of canceling the merger. CBS went down close to 6%, and Ruger went down 4%. That's a new position. Overall, when you look at my positions, how much they have made since I own them, overall, Google is up almost 60%, but that is just a small position that I bought at $90. So I've been wanting to jump back in and build that position. I'm still looking and seeing what will be a good price to go in. What do you guys think? Do you have any ideas on where you will be jumping back into Google as it continues to do new highs? I have Highwood Realty. It's up 23%, and also when I bought it, it pays at the price that I bought it. It pays above 10% of dividend. I think now it's like at 8, but yeah, I really like that. CSX, that's a railroad, is up 20%. Another of my the other REIT that I have is I don't remember the name, but it's AHH. It's up 15, almost 16%. It went down a little bit in the last couple of weeks. But when I bought it, I think the dividend rate was somewhere around 8 to 9%. So that's also pretty good. And MasterCard is up 15.7%. And my top losers, PayPal is down 2.45%. And this was at the end of January, and you probably know what happened after reports of PayPal. Ruger is down 0.3% at the end of January. Albertson is up 0.86. So these are my top 5 losers. Pepsi is up 2.88%, and Movado is up 3.33%. So not bad. Out of my whole portfolio at the end of January, I had only 2 stocks in the red. I really appreciate all of the support and everything that you guys are doing for me. Please continue to let me know in the comments how I'm doing and the things that you like and the things that you would like me to look into. And that's it. I'll see you in the next video. Thank you.